Alright, so I'll do my best to try to talk it through. So Vega deals with volatility. I picked it up. Yeah, so Vega it's just volatility. If you're not that whatever, there's a bunch of different spread. Like if you're going for like a different type of spread on that, you're gonna want to collapse an IV on that, and you can do that through multiple things. Personally, honestly, what I would be doing, it depends on how much you want to make off of it too, and what risk exposure you want, honestly. So like look into your diagonals calendars. If you just let me know if you know how to put those on. If you don't know how to put those on, I'll walk you through it. there's a bunch of different ways to play off Vega, by the way. Again, I like to get you the basic side of things and know where to point you in the right direction to look. And then once you understand calendars, diagonals, and a bunch of other things, then you can start building off positions to fit that and how to boost it, drop it, however you want to play it. But I want you in the right direction first. Okay. Honestly, it's like SPAC is one of those what is it, NKLA nickel whatever trades, like where you can just do a double diagonal on it, and you can just do it front week, back week essentially, or you can just be doing straight up calendar or diagonal on that, which I would probably do depending on how you want to do it as well. The only problem is yeah, they only have 30 DTEs on that, 30 days till expiration. It sucks. Let's see if you really wanted to do that too. Let's see. It's gonna cost you an arm and a leg, I bet. Yeah, it'll cost you an arm and a leg. I don't know. That's like it's one of those tricky names that it's gonna stay. Ivy's gonna stay inflated just based off of its history. It was like airlines and cruise lines during the sell-off, where they would be down 20% in a day, but you'd be green on your calls because everything is just so jacked up. That's one of the plays right here. So there's a bunch of different things you can do. I would obviously look for short-term selling, like front side month on that. So if you wanted to do, depending on your stance where you thought it was going to go, you could always like sell. If let's just put it at the money. So sell 1750, then buy the 1750 for November, and kind of just let it play off that. Unless you think it's going to go down, which would still work in your favor. But even if this stalls out at 17, then you're still making money off that as well. What could you get for a super wide IB? 12 is a good spot. It's probably want to jump to 10. Yeah. So how about this? This will cost you, it'll put you a lot of risk. Let's do it 25. Or you can push out to 30 if you really want to. What's the spread on this bad boy? That's actually pretty tight. Holy fuck. Do this. Do this. If you have 220 to spare, I really, really like this trade. Throw an IB on their Iron Butterfly. So what you're going to be doing is selling the 1750 call put on that. You're going to be buying the 10 put for protection, and then you're going to be buying the 25 call for protection. So it allows some upside, obviously, and it allows all-time highs on that, but it also, that little period between July and what is this? July and all of August, where it caught a bit on there on the fall down, and that's your range. That's a big ass range for you to do that. And I mean, if you obviously get peak at 1750 and it falls down, you make 500 off of it. So you're risking 200 to make 550. It's 30 days you have to wait to make that. I mean, that's the problem on it. But if it's one of those things where if you're using 5% of your account, like it's a decent trade to just throw on, walk away, and continue going about scalping. Yeah, 1 second, I'll type it out. So just here, I'll put the letters next to them as well. So you know which what to get. Was it 25 I did? Yeah. The only problem with running an iron butterfly on that, since IV is inflated, you're not going to get the decay until later towards the maturity of that contract itself, those contracts. So it'll be frustrating for a couple weeks, but that'll be a big range to play to. You've been stuck in this range for all of this. Alright, and then so like at 12, so 20 minutes from now, I'll go over the 0 DTE scalping thing that we were suggesting this morning. How to set it up, the mentality behind it, what you're actually playing for, why today of all days to try to start to teach this is a bad idea. But we'll go into that in about like 20 minutes or so. Yeah, so like the spread on that kind of opened up a bit since I posted it. It was basically a $5 bid on it, then $5.50 for the ask, but it's opened up to $4.70, $6.33, which is you can probably mid mark that. Yeah, it's just gonna look like a giant pyramid for yours. And if that thing utterly explodes to the upside, let's just say that thing goes absolutely bananas, and 25, 30, like it's everyone says it's gonna do, you're barely gonna lose anything on that. If you're fine losing 220, you're gonna be fine losing 10% of your position if it hits 30. So gives you a ton of room to work with. I'm not really looking to play this range right here. It's been happening since like 11:15 until I get some type of movement, but I don't think we're gonna get movement, that much movement leading into Papi P's presser later. So this might be the range for the whatever, maybe down a little bit more, but until that hits. It's not bad. What is it? 3-point range? Yeah, 3-point range. That would be fitting. Just roast the hell out of all contracts right before then. And that's the thing about like these, if you play short-term dated calls, puts, whatever you're playing on this, like the drop off after he starts talking is it's the most frustrating thing in the world, especially if you're selling. All right, because it'll drop off, it'll work it with you, and then once like you get the movement, then it like picks right back up. So it's frustrating. Frustrating both ways, buying and selling. Never buy on an FOMC day. And by the way, if you haven't tried this yet, the AHA, I think it's by Coca-Cola, they have the best flavors for static TV water. They are awesome. And this one has caffeine in it, so it's like black cherry plus coffee. And it's got 30 freaking grams of caffeine. It's a freaking half a cup of coffee. Holy butts, man. I almost gave this to my son. He would have been hyper as shit. So I'm trying to also find options plays for this. I think a target is sitting barely green right now from when we talked about it last, which really sucks because you're getting other names that are breaking out within that, like Costco. Like Costco's up, why isn't Target up? They're the same sector. And what is it? I'm sure Amazon now. What, Amazon's not up, but I don't know. Retail stores, what's Walmart doing? But they're propped up by the TikTok bid, right? Yeah. We'll see. Trying not to get baited by this. I want this to be my pickup area. What's that? It's like 106. Yeah. You want that line. What I gotta do today too, I need someone who's like super handy with like setting up like a mount for a TV too. So I'm gonna like basically, someone told me like find the studs on there and like create like nail a 2x4 up there on multiple things, and then just that way you have all this to work with setting up a TV mount for like a 60. I just don't want it to fall. I know I'm like horrible with tools, and I don't know how you can be horrible with tools, but I am. Yeah, so in all honesty, like there's probably going to be some stalling before 2 o'clock today. That's why I kind of wanted to use that time from 12 to 2 to create like an open forum for anybody who wants to talk about the 0 DTE option scalping. There's some really good resources out there, like really good. There's a lot of people that have different takes on it. But they all revolve around just multiple, hold on one second, They all revolve around the same, almost three things, and people just build off of it in different ways. So that's kind of what we'll be doing to kind of get that tool belt together. So you're just equipped to adjust not only based on your bias, but what you think the market conditions are. I'm also looking for a short on RK or RTX. I want the reaction off of 6350 to see how serious the move is. And I'll probably just stick to a weekly at the money. What are they running? They're running 50? 50 per contract? Like that 6350 has been the key pivotal point since where? Everywhere? Where is it? Yeah, since April. Like I want to pick up at 34.06, give it like a 1, maybe 2 point stop, just in case they try to run people under that. Which I'd probably be ran over by that anyway. But I don't even think it's gonna get down there. That's what I'm looking at. Those are the hard reactions off those areas. And if resistance becomes support, then support becomes resistance. Is that the age-old saying? What else is out there? So healthcare is actually looking pretty good though too. There's a little push finally. Let's see if I can look for anything else. Also, wins daily to maintain the 50-day. I missed my entry. I did. Didn't I? Win is also another one I'm targeting for a possible pickup. Sports are coming back, you know. People like casinos. It's sound logic, I swear. Look at this pullback though on the hourly. Like a good little breakout, maintain the line, pulling all the way back. A pretty strong move too. Just give me a little bit more of a push. So you can notice here too, I'm sure like it's not going to be absolutely the same, but you can just see where people are attacking to. And you're in a really thin spot here. That's why I'm a little nervous, because it gives you leeway down to this area before you get some volume areas. What's up? So I may see. What we got here? Alright, so they're gonna hold that, try to hold that level. Alright, so we'll do like 2 minutes, and then I'll kind of put this on hold so we can talk about that stuff. If we can get into something decent. So, no, come back down. Damn. Okay, activity really picked up for that area. I should have just placed an order there. I don't know why I was doing that. That's fine. That's shitty. I might just take a position and let it ride while we talk. Here. No, that's fine. Okay, we'll just make it quick. That's all. Hold on, was there something? Okay, so the whole point of this was to the 2 hours right before Powell was going to talk was to kind of give something to do rather than the stalling action shit that's going on. So what we're starting up this week and probably for the next month or so is going over 0 DTE scalping, which is days till expiration. And it's just meant for playing non-directional, meaning you can have it do whatever you want. It just has to be within a certain frame. It's a lot like the earnings trades that we do. It's playing off of the implied move, what's being priced in, and then if it's being priced in, selling outside of that, and then trying to collect whatever you can. Just a general overview, it's heavy selling. Hardly ever do you buy to open unless you're expecting volatility to pick up. On event days like this where it's Powell, premium is inflated, it's going to be frustrating all day regardless of what you do. It'll stay high. It's still high, even if you pull up SPY, SPX, whatever you're trading. Waiting for data, of course. So it's still pricing in what we talked about, a 350 or 340 move this morning. You're still looking at it's being priced in at a 260 move for the day. So they expect a little bit of movement once he starts talking. Setting this up is going to be the easiest thing in the world once you know what you're doing, and then creating off of it is when the creativity shows and the intellectual side of getting away from uppies and downies. So when we entered today, we looked at the implied move, we looked at the economic calendar, and then we kind of just wanted to gauge how everything was moving based on the chart and etc. And so we came to, it opened up at 30 or 342 on that. So basically a $3 move to the upside puts it at 35. A $3 move to the downside put you at about we did 38 just because you want it off that a little historical area. And it's playing perfectly, but if you took that trade this morning off of that, you're barely up about 15%. Doesn't typically happen like that. That is not a norm, so don't think that, oh, it's whatever, but this is why this is probably the worst day to start teaching this because of how that reacts. But you're going to notice that huge drop off in either IV or depending on what's set actually, in case whatever things get moving. But you're going to notice it's just a huge drop off. So playing the buy to open side, you're just going to get murdered when it's not moving in your favor at just a faster pace. And if it does work in your favor, you're just not going to get the big gain that you thought you were going to get based off the movement. And obviously this all, if you don't understand IV, the simplest way to explain it is, you know, if you're buying a 342 call and it costs you $3, that it's pricing in that big of a move. So when it has no chance of reaching that move, that premium is going to drop heavily. And that's where you take your biggest losses. And it's not simply just theta. It's not simply just delta gamma working against you. It's that IV. That is the simplest way to put it, and to kind of wrap your head around it without trying to get into the deeper sides of it. So setting that up, a lot of people, there's so many different strategies out there that people use in terms of trying to not sell you something, is more along the lines of, I have this new creative 0 DTE strategy. Everybody needs to know about it. You can just forget all that. They're just setting up different versions of these three things. They're either going to be selling a strangle, they're going to be selling a straddle, they're going to be setting up and then capping it to either side, or they're going to be naked on that. And then depending on how you cap it is when you get your different names that come over this. You know, and these people do extremely well, so I don't ever want to knock them when it comes to this. You get your, you know, it's the JB they're called iron butterflies, or IBs or whatever. They're iron butterflies, and an iron butterfly by nature is just selling a straddle and capping it. You'll get these Tammy iron condors when it comes to this, and it's just it's just capping a straddle. And then you have your naked. So you'll have like a double Icarus that some people do off this. You'll have the winged plays that everyone calls them, doing that, and just capping those in itself is just another form as well. When you get creative enough with these things, you learn how to play off of what you expect. So if you're expecting an IV drop on these, selling is obviously going to work in your favor, but you'll notice that other things open up as well. Doing calendar spreads, diagonal spreads, playing off of the next Friday expiration. A bunch of different things will open up once you get a good grasp of this and start building differently. So one of the main things too, I like to tell people when 0 expiration days happen, whatever, is check out the implied move. And that kind of gives you a gauge on where to sell. You're going to notice that typically around these levels, deltas are going to be the famous thing that everyone sells around these, because that's what it's moved off of. It's going to be 5 delta to 10 delta. And they're not just doing that based off of delta. It's typically where the implied move is. And if it's not there, you know, maybe they're buying too close to the money, or too much for the move. So playing off of that, I've found greater success. It's better. It's good. You can back test it all you want. It was running at about 84% once I did a couple things to it. Hold on one second. I might want to take a position just so I can have something going, but I don't. Thinking and talking and watching all at the same time is difficult. And so, okay, so just working off the implied move, and then setting up your iron condor with that, always selling outside of it. So you'll be selling, like today was $3, so selling the 45s and selling the 38s, and then capping it based off of how much you want to risk, how fast you want it to decay. And so again, don't worry about where should I cap it at, where should I do that. You just need to understand where to set up your sell strikes when playing this. So your strangle is what its iron condors are, and then capping it is there. If you do $5 wings on that, it's going to decay pretty fast on a normal day. If you set up really tight on a $1 strike, it's going to decay really slow, and you're probably not going to get even close to the value you want until 2 p.m. on a day. So the faster you separate it, the faster it's going to move for you or against you. That's something that you're going to learn, and how much you want to risk when it comes to that. So $500 on that, so let's just say we're playing SPY and you do $5 wings, max is going to be $500 that you could lose minus the credit that you're just taking in. But with these plays, you have to give money to make money, essentially, if that makes sense. Some people really struggle with this fact that you're not actually risking $500, because you would have to hold that till expiration in order to lose that much. So you're giving, it's like essentially, I'll give you $1,000. I can take back my money any single time I want throughout this. And you can set your own standard. You can set a 20% loss, 40% loss, and give it time to work. All right. That's going to be the trick part that everybody struggles with, is everybody wants to keep it tight. They don't want to risk much, and they think that it's going to work in the same as buying with a buy to open and having this unlimited profit or whatever. But you need to understand the internals of your contracts and your spread, and knowing the delta, how it plays into your decay and the growth of whatever spread you're taking. Hold on, sorry. And that's all I want to get across when it comes to this. So today was I expect movement. All right, it's a Powell conference. He could say, all right, we're going to turn on the money printers again. So buying an iron fly on this is not fun because it plays within a tight range. All right, and obviously, you know, most of your money is going to come from, you know, the middle of whatever you're taking. So if you took a 342, obviously you're sitting perfect. Like today, if you took an iron butterfly today, you were sitting great. But once Powell hits, you know, and that could fly in any direction whatsoever. If we stall there, that's going to be a beautifully executed trade. But when I expect movement and I still want to sell, I'm going with my iron condor. I'm spreading it wide and I'm just letting it decay because I have a giant range that I can play off of where I'm going to be making my max profit instead of a pyramid shape. And so if I think today was going to stall all day, then that's when I'm throwing on my iron fly. All right, and it's capped. And again, I like to cap with different levels off of the implied move. So typically I want my break evens to try to hit off the implied move as well, if I'm selling an iron fly. So I think that would have been here. Let's just see what it would be at right now this second, even though pricing is going to be a little different and you probably wouldn't be putting this on right now. I believe it would be a 36, 35, 30, let's see. Let me just check it out real quick. To the downside, yeah. Yeah, that works. Okay, so it's later in the day, premium is already decayed, so obviously you're going to be risking a lot more in order to make money off of this, rather than if you got it in the open, it would look like your typical butterfly for your risk analysis aspect of putting it together. So if I was to do this right now and I wanted to collect $226 and I wanted it to play off of the implied move from the morning itself, it won't be completely accurate, but it would have been wider this morning. So I'd be selling the 342s, I would be buying the 48s for the call side, and I would be buying the 36s for the put side, and that would put my break evens right at where we were today. $3 down, $3 up, and that's how you can do it. So that alone is what, $6 wings? Wings is just the cap, the distance between your sell side and your strike side for anybody when I say wings. So that's how I would set it up. So when I'm setting up an iron condor, I'm just going to be selling right at the implied move or right outside that, and then it doesn't matter where I set up the other side because I'm going to be defining my speed. Rather with an iron fly, I need to be a little bit more creative and then send my break evens along that implied move. Does that make sense, or am I speaking a different language? Or is the music too loud and it's really hard to hear me? Okay, so if it makes sense, that's good. That's what I'm trying to do. Yeah. All right. Yeah. You're the exception to the rule right now. So yeah. So like talking about like some of these tasty traders that are out there. There's the Tammy Iron Condor out there where she does 5 delta off of that. It's 2 set in stone from what I've been doing, and while she has all the data in the world to do that, she walks into every day with the same strategy rather than adapting. That is my only problem, and I remember she was struggling through the crash and the recovery part of the crash because everything was just too. It was making beyond the move because no one knew how to price in a crash. So sticking to that strategy was bad. So she's just selling a strangle on each day. All right. and then she's capping it based off of wherever she wants. You don't have to cap it whatsoever. And that's what people need to realize, is the only thing you need to worry about when setting up these 0 DTE scalpings is the sell side. Everything else is just fun and games. Yeah, exactly. So like you have to have a tool belt ready to go that says, all right, times are different. We're not actually playing to this options market. This option market doesn't know how to price this in. I need a different strategy until it starts doing that. And that's when understanding that where your sell side goes for each day. And they create the implied move based off of the historical volatility of the options themselves. But if you get creative, you can go for the historical vol of the underlying itself, which it's pretty good. It's pretty accurate, and you should really check it out as well. It'll give you different values than the implied move as well, and you'll be collecting a little bit more. Hold on, sorry, I'm just checking. My sun is up. You'll be collecting a little bit less, sorry, not more, than that because of the pricing itself. So it'll be deeper out the money, probably looking at a 10 and under delta, and you could just run a 10 lot on that and just let it ride and collect on that. And again, the biggest thing that everyone always harps on is that, well, you're only making $50 to $100 and you're throwing 1,000 at it. Well, I'm not really throwing 1,000. Like, I'm putting it out there so that I can put on that play, fully well knowing that I'm just going to take it off if I need to get out with, a $150, $200 loss on that, because I want to be able to make that back the next day or the following day combined to be fine. Like in setting up a recovery time on your strategy as well is probably one of the most important things, that if you break that rule and your strategy has success, has that 60, 70, 80% success rate, you need a safe word. Essentially, you need a safe word that says, I'm done at this because my strategy works, so that I can make it back this week or the next week. That should make sense to everybody as well. And it's for just a lot of reasons. It's also for risk management, but mainly just to make sure that you're not breaking your habits. Yeah, exactly. It's not necessarily just needing the stop too. It's just you need a rule that says that you're not going to take a month to get back your losses simply because you let it ride. You need something that says, if I'm having success, all I need is 3 expirations and I'm back green again or something. That is the downside of these types of things, is when you lose on one, it's going to take you a couple days to recover. But since it has such a high success rate over time, that's when you make your money. So there's only 3 things you could possibly do. Okay, it's just, you're either selling a strangle, you're selling a straddle, or you're naked. No. I don't have the benefit of the morning currently anymore. Before I would, because mainly, what was it, today at 9:45, like here I took on trade. I just wanted to get something under my belt, and I took a trade at 9:45. Yeah, 9:45 right there. I just wanted to do something before I take care of my son. So I don't have that benefit currently. I'm hoping to get that benefit back again, to be able to have that, because I don't want to walk away with that open, especially on a day like today. That would be a headache. Even though it's playing perfectly, it would just be a headache in my mind where I would just be checking my phone. If I was at work, I would just be constantly looking at that because of the risk factor that involves. And one of the things too, this is a great thing that I thought of real fast. When setting your stops on here, it's really important to know the order that you're going to be using. If you use a buy stop, that could get blown out, especially on a wider spread that you're using. If you use a limit, it could get just ran for no reason. So understanding your order, and you could do a once hit market order on that as well. So, and you just have to understand that those could potentially get blown out, and that's why I like to be around for my trades. I don't want to put them on and walk away, because I don't want anything set up and then just widen that, take it out, and then, even though it's sitting perfectly. Yeah, no, screw that. Like, I have money to make. Like, if I don't make money, then my life changes. So even if I'm making $100 or $500 I hit on a play, that's great and it's fine. But if I don't make something on that, or if I have a down day, it affects things. So I'm not looking for this huge win every day. And mainly, like, this trading that I'm doing up here is mainly just for people to look at, watch, and for me to make a little bit more money. It obviously $6.25 isn't going to get me much, but it's for entertainment purposes and kind of to walk and talk at the same time. And it allows me to do this too. So instead of just having a blank screen you're staring at, I can now run through this. I don't have 140 characters to work from. Do you have any questions though about like 0T scalping? Like if you have a grasp on straddle strangles and naked, then you're just getting creative with it, because then, you know, your world opens up to diagonals, calendars, double diagonals, double calendars. If you really want to play off of Vega, if you really want to play off all these different things, what is it, Zoma, you can play off of that. Vanna, you can play off of. There's tons of different things that you can create once you dive into those three and understand what it means when you take those positions. I'm not gonna lie, this target trade is really pissing me off. Like, how the fuck is Costco gonna be popping and then Target's not? It's the same type of fucking store. I might wait out Powell and see what kind of tricks he's got up his sleeve, but some funky jazz playing. I like this. Okay, I don't understand to use an iron butterfly, so you will buy. All right, so if you're buying to open an iron fly, so you're buying a straddle. A straddle means you just want it to go in either direction, but you don't care which direction it goes. Obviously you have to cover for what you're paying for that. So let's say it's $3 to buy the call, $3 to buy the put. You're combining that together, and that's your break-even price for both. You don't need to work through it. That's what it is. So you need a bigger movement than what you paid to either side in order to make it back. Because if you bought the call for $3 and the put for $3, so you need a $3 move to the upside to break even on that call, and then you need $3 more to the upside in order to break even on your put as well. So when you're setting that up and you're thinking about that, that's the type of move that you want to think to put on. Is you want a huge expansion and you want a volatile time. So if you think that Powell's about to drop some craziness right now, you'd throw that on a buy to open. Or like an earnings play, like something that you just know has a huge reaction, huge movement off of whatever it does, and you just don't know which direction it's gonna go. You don't have a bias. You don't have like, oh, Disney's streaming numbers were great this year, and that could be a bias, and so it'll beat their expectations. So I want to the downside, or I want to the upside with that, but they could also miss on park revenue. So I want to get something that can make some money if it also goes down. So it's just that's how you want to do it. Just you think that it's going to do everything but meet expectations for the move. And so then you just flip it around if you're selling to open, and you're saying it's going to meet expectations for the day. Price is going to stall. It's not going to go anywhere. And that's when you do. The only thing it's going to do is just work like a butterfly, where your profit is going to kind of start off like an oval in terms of like, on the underlying, like a half moon essentially. And it's just going to continue to expand into that pyramid until, whatever, you take it off or it hits full expiration. Yeah. And so, like, that's what I mean. So an iron butterfly is just like an iron butterfly is just a straddle. And look at all the things that you can come off with it. You can come off with a you can set up double diagonals double calendars off like that. You can sell off the iron butterflies like that. You can play high gamma scalps off that. There's just a ton you could do. And it all comes down to creating the base of understanding of what those are. Did we give up this already? Yeah, we did. Perfect. Okay. See, do you notice the difference, the way that things are being attacked here? So there's a heavy push to the downside still comparative to there. So which means like probably try for this little liney pickup. But if I can find something that is more relatable. What do we got? Yeah, I don't think it's gonna drop that far, is it? No. Yeah, somebody's pushing. But yeah, so if, do you understand like when to put on an iron fly now? It's basically as long as you construct it within the implied move or the action of the day, you can technically set it up whenever, wherever, as long as you're fine with how much you're going to make too as well. Obviously, the tighter you make the thing itself, like you're going to be making less, because the more you cap a straddle, the less you make. I should. Liney boy wins again. So like, what's that one guy's? He runs a double Icarus, which is just a legged in. What is it? A legged in strangle? I believe so. And so you just come up with some fancy names, you slap it on something, and all of a sudden you're a genius and you made a new option strategy when you really didn't. You just worked from the same three things. It's in a bunch of books that have been around for quite some time now. But everyone just caps them differently and slaps a name on them. The back test queen though, she's got it down though. She'll give you stats for anything. They're great too. I love reading over their stats. I don't know why. It's just like, oh yeah, she's got to like, if you enter every 15 minutes of the day when Vix is this level and this and that, like she has everything planned out. It's awesome. What if we just enter right now? No? Yeah, so learn your sell side for your strikes, and then everything else is just your risk. And it's just, I hate saying that because everybody interprets that as like this Twitter furu stuff, like do your own due diligence and you know, you just gotta do your own thing. And like, no, it's like, this is literally defining your own risk and how you want to play, but the initial sell side is being strategic, and that's the one you need to learn. And then I base that off of the implied move. It works great with earnings plays. Just great. I think I'm gonna, yeah, let's see. See how it goes. I knew it, the push was coming. Look at that freaking 53.28. Get out of here. Oh, they're pushing harder. Don't flush me, motherfucker. God damn it. I thought for sure, like, okay. Let's see, hold on. Oh, damn, they're pushing hard. Yeah. They are pushing hard as fuck. What the fuck was that? Yeah, that sucks. I saw a 96 lot fly in, and then it was followed by the 40-20-20-20. I knew I should have just waited on that, but that's fine. I thought I was seeing something special. Look at that. 20, 50, 53, 40, 20, 20, 96, 56. Jesus. And you're getting nothing out of the ass side too. Someone just plowed that order. Yeah, of course. There's still pressure to the downside. I do really like the way the 15 minutes setting up though. The 5 minute does not look good though. It's goofy. Next race. Alright, so everything makes sense though in terms of 0 DT scalping and playing off of historical vol on the options chain, and you could do historical vol on the underlying itself if you want to do both and kind of play the in-between. Sell depending on how volatile you want to be by putting on a strangle and playing outside of those for the day, for the time period, for the chain. And then if you think it stalls, switch to strangles. And then if you really just want to get fun with it and have complete open exposure, is just sell naked. There's really not too much to it. I mean, there is, but there isn't. Everything boils down to risk management once you hit trade. Why is Snow trading at 240? Why is Snow trading at 240? Holy crap. Okay. I need to find something to play. This is just gonna get walked down. Oh yeah, what's the art? Shoot. So RTX was one of the ones I was looking at. Didn't really reach the 6350 mark that I was looking for, to see how orders started flying in, if that was what they were going to try to push it over, or if they were going to do that. So I'm gonna hold off on that. There's no changes in volume weighted average for that, so until that starts to curl too, I'm gonna be doing that. Little dude's doing good. He's taking a nap right now. He keeps on having these giant scares though, which and then we have appointments 3 days a week, all during hours, no matter what, or during market hours, so it sucks. We have to, they're still trying to handle the ratio aspect of his insulin. And so he'll have these huge violent spikes or huge crashes, and it gets dangerous to the point if he drops below 50 for an extended period of time, he risks just a bunch of shit. And or if he stays too high above 300 and 400, he dips into the DKA state again. So he's an emotional roller coaster. Plus he's got this new thing where he wakes up at 3 a.m. every day for the past 4 days now, and then stays up for an hour or two and then goes back to bed. So coffee is awesome. It's the greatest gift ever made. Yeah, that's what we had to that's what we were talking about yesterday with the physician, was getting a better ratio to help maintain him, because it just wasn't working. Have a good one, man. Did I miss my move? No. 5 minute looks ugly. 15-minute actually looks pretty good. I don't know. How is this? How's a 15-minute looking good? And that's looking bad. So we're gonna probably set a... Oh, man. Do we want to get funky with it, like for FOMC, and then like throw something at this, like a break over here? So you got another hour left on it. Set a buy stop if it goes wiki wild, then it works out. So I might actually play financials here. So sorry, coming back. So it's right at that trend line again. Every single time it's at this trend line. We call it the super bounce. And it's setting up on a bull flag on the 5 minute. And hourly is just all over the place, doesn't really matter. This is for Bank of America. It's super cheap. You can get next week at the money for 55 cents on that. I think it might be worth a risk to play to 26 off that. So any sign right here, like trying to get a bounce here. I'm probably gonna try to play a bounce here in a second. Oh, all right. Let's see where this is at. But yeah, so any bounce. Oh, man, that would have been good. That's what I would be playing for. And so it gives you about 9 days, I believe, right? Yeah, 9 days till expiration. I think it might be worth it. You can get this a 10-point drop off of this as well, and still be fine. You know, you can pull out on the hourly. It's, you know, consolidating as it should before a FOMC meeting. My only thing is you get like one of these that'll wick me out. But blue line is still intact. It's still intact. And so Coca-Cola is also flirting. It's like if you're looking for these cheap names, Coca-Cola is still flirting with that 51 level. And it's got, you know, this is the second retest after it came back into the gap and going back in there. So higher chance of breakthrough on that. If you wanted to play next week as well, I'm sure they're just as cheap. So you're looking at about a 51 at 80 cents, or you can do 55.50 at 52. So another reason why I'm leaning bullish too is Apple's in this this 5-minute falling wedge on there as well. Yeah, everyone knows if Apple gets moving, the market gets moving. So the second that breaks, it'll be another confirmation as well as whatever ES is doing. Five minutes still looks like trash, but this 15-minute getting a wiki right here is something I'm actually I want to see. So I think that we were doing something like this, where you're like bouncing off that. Hourly looks weak, 5-minute looks weak, 15-minute looks like covering, and you know, maybe. So that would be my line. 32.42. Yeah. Wait a second. Why is this not loading? I just realized that. Why is this not loading? Hold on. Let me restart real quick. Actually, you know what? I think what we'll do is we'll call it for now. We'll come back later during power hour and go from there. Yeah, so we'll see you soon for power hour, and we'll do that. And while I get everything set up, I don't know. I was just noticing. I was like, why is that bullish and why is that not? And so we'll go.